let's just say I asked 10 traders to draw support and resistance on the same chart. Honestly, I'll probably get 10 completely different answers, because support and resistance isn't about drawing your perfect line on a chart. It's about understanding why the market reacted there in the first place. And honestly, that's the part that almost nobody teaches. So throughout this video, I'm gonna be showing you guys how I actually use support and resistance in my own trading. We're literally gonna go through all the basics from real support, fake support, liquidity, and most importantly, how to stop treating these levels like magic lines and start understanding what the market is actually telling you. So with that being said, let's not waste time, let's get straight to it. So before I explain what support and resistance actually is, I wanna clear up the biggest misconception I see every single week. Most people think support means buy and resistance means sell. And that's probably the biggest reason people blow up their accounts. So let's say we have this set up here, price comes down into support, and then immediately everyone starts buying. Why? Because probably someone on YouTube told them that every time you buy into support is always gonna bounce. Think about it like this. Imagine your favorite football team won their last, let's just say 5 games. Does that guarantee they're gonna win the 6th? Of course not. You guys need to realize that institutions aren't buying millions of dollars worth of shares at one exact price. They're buying within an area, which means support isn't actually a line, it's a zone. And once you understand that, drawing support and resistance becomes a whole lot easier. So here you guys see price starts selling off. Eventually we trade back into the support zone that we identified earlier. Now I want you guys to ask yourself this: should you buy right here? Put in the comments, what would you do if you saw this chart? Most people would say yes, because they didn't watch the video. Just because price reaches a support zone doesn't automatically mean buyers are gonna step in. It simply means we've arrived at an area where buyers might become interested. Now let's compare that to another example. Instead of aggressive selling, momentum slows down, sellers aren't pushing price lower anymore, and then we got our first strong bullish candle right here. So now buyers are finally starting to show themselves, and notice what I didn't do. I didn't buy simply because we touched support. I bought it because buyers proved they were willing to defend it in the first place. Like I keep saying, I'm gonna keep repeating this throughout the whole video. I don't care about buying the absolute low. If I miss the first one or 2% of the move, that's completely fine with me. I'd much rather sacrifice a little bit of profit in exchange for a much higher probability setup. So sometimes buying a little higher, it's actually pretty safer, because now the market has confirmed your idea. Price breaks below this level, everyone starts panicking, everyone starts selling, and then almost out of nowhere, the market reverses right back above the level and then keeps rallying. And you're not alone. Trust me, this happens to me even till this day. And where do you think all those sell orders are gonna be sitting? Exactly, so right below that obvious support level. And that's where liquidity exists. I'll explain liquidity for those who don't understand yet. Liquidity is nothing more than orders waiting to be filled, all right? That's pretty simple. The market is always searching for areas where there's a lot of buying and selling interest, and obvious support levels usually have exactly that. Now watch what happens. Price breaks below support, everyone who bought starts panicking like losers, and some people even start opening short positions because they think the breakdown has finally happened, and then boom, buyers step in aggressively, price reclaims the entire move, and then now all those people who panic sell are forced to watch the market rally without them, okay? A recent example of this is a trade we're currently swinging in the Discord. I'll put a screenshot somewhere here. But remember, the first move isn't always the real move. Sometimes the market needs to shake people out before showing its true direction. That's why you guys don't see me reacting so emotionally to one candle or one small move. Now let's flip it around. Imagine resistance. Price keeps rejecting the same area over and over again, and every time it gets there, sellers push the market much lower. So eventually, you guys will start seeing buyers become strong enough to break through. Now think about everyone who was shorting that resistance. Eventually the market is gonna pull back probably to the old resistance, because those short sellers finally have an opportunity to get out, to close a short position. So they have to buy at the same exact time. So new buyers see the breakout, they start buying the retest, and now you have buyers entering and short sellers buying to exit. And that's a lot of buying pressure happening in the same exact area. That's why resistance becomes support. Now, does every level flip perfectly? Of course not. If that was true, I would be Jeff Bezos, all right? Nothing in trading works 100% of the time. So now that you understand how support and resistance flips actually work, Let's take it one step further because not every type of support is horizontal. Some of the biggest trends you'll ever trade never come back to a horizontal support level at all. Think about some of the strongest rallies you've ever seen. Price just keeps making higher highs, higher lows, and if you're waiting for price to come all the way back to a horizontal support level, you'll probably never get into the trade. And this is where dynamic support comes in. So notice how every time price starts pulling back, it never reaches our previous horizontal support. And instead, it keeps finding buyers around this moving average. Now, here's a mistake I see a lot of people make. The EMA is not support, all right? I'm telling you guys now, the EMA is not support. The market is using that area as support. So the moving average is just helping us visualize where buyers continue stepping in. So let's just say tomorrow buyers stop respecting it. Guess what is gonna happen? It's gonna stop working. That's why whenever I'm looking at a dynamic support, I'm never just looking at the moving average. I'm asking myself, what is price doing around the moving average? Are we creating higher lows? Or are we just chopping around the moving average with, I guess, no direction? So now that we covered all of the individual concepts, let's put everything together. This is exactly how I analyze every swing trade before I enter a position. So the very first thing I'm doing has nothing to do with support and resistance, if I'm being honest. I'm always asking myself, what is the overall trend? If we're in a strong uptrend, I'm looking for support to hold. If we're, let's just say, in a strong downtrend, I'm expecting resistance to hold. So remember, support and resistance should always be viewed within the context of the trend. Now let's say we've already identified that this market is, let's just say, bullish. We're making higher highs, higher lows. I guess my next question would be, where would buyers most likely want to step back in? And this is where support comes into the picture. So instead of drawing 20 different lines across your chart, I'm looking for the most obvious reaction zones. So usually, like I said earlier in the video, you'll notice that one or two areas stand out immediately. Those are the only zones I care about, but just because price is moving towards support doesn't mean I'm interested yet. Remember, we talked about this earlier. Support is an area to pay attention. It's not an automatic buy signal. So all I do here is just simply wait. Price continues drifting lower, and eventually we'll enter the support zone. We get a strong rejection wick, and the next candle here closes bullish. Now buyers are actually giving me something to work with. Now before I ever buy a stock, I already know exactly where my stop loss is going. So if buyers are truly defending this support, then price shouldn't be making new lows below this area. But if it does, let's just say it does, that means my thesis would be invalid. And that's where my stop loss goes. I went over stop losses and risk management in my past video, so go check that out if you haven't. Now let's talk about targets. One mistake I see all the time is traders entering a position without knowing where they're planning to exit. I guess they're hoping the market tells them, but to me that's backwards. Before I enter, I'm already identifying my next major support zone. Because remember, resistance isn't just somewhere price could reverse, it's an area where sellers previously became aggressive. So if I'm buying support, it only makes sense that my first target is the next meaningful resistance. Now here's something else I want you guys to notice. As this trade starts working, I'm not staring at my phone every 5 minutes. I'm not panicking every little red candle because nothing has changed. The trend is still bullish, support is still holding. As you can see, higher lows are still being respected. The original reason I entered the trade in the first place still exists. And notice something about this entire process. I never once said I know exactly where the market's going, because I don't. I'm not gonna lie to you guys and act like I'm this type of guru or something. I'm just like you guys, all right? I just developed a strategy over the years, and all I'm just doing is relaying it to you guys, all right? So if you combine everything we talked about today, understanding the trend, finding quality support and resistance levels, recognizing liquidity, and letting the market prove your idea before you're risking your money, you're already thinking differently compared to 90% of retail traders. Now, if you want to see exactly how I apply what we talked about today in the live market, that's exactly what we do in the Discord. Every single week, I break down the charts I'm watching, where I'm looking to enter, where my stop loss goes, and where I'm planning to take profit. My goal has never been to just tell people what to buy or to sell. I want to teach you guys how to analyze the market for yourself, so eventually you don't need anyone else's opinion. If that's something you're interested in, I'll leave the application link below. Other than that, I hope you guys got some value in this video. If you did, make sure you like and subscribe, because I have a lot more educational content coming, and each video is gonna build on the last. So in the next guide, we're gonna cover one of the most important concepts every swing trader needs to understand, and that's market structure. Once you combine market structure with everything you learned today in the previous video, you'll see trading completely different. But I appreciate you guys watching, and I'll see you in the next video.